Hello, my fellow investors, and welcome back to another fundamental analysis video. As I said, guys, I was going to do a lot more of these. And in fact, I even said that I was going to begin taking your guys' recommendations. And that's exactly what we're going to be doing today, because we got this company, Global Payments, that was recommended by none other than Tony. It feels like Tony just goes away. And then whenever I'm like, okay, I want recommendations, Tony's just like, these 50 billion companies. Gotta love you, man. Gotta love you. But he pretty much recommended for PAYC and GPN. And then Brett recommended, or he second, GPN as well. So we're going to cover GPN today, guys. A company that I've never covered before here on the channel. And it's looking interesting. So we're going to take a look at, of course, what they do, the fundamentals, the charts, like how it has done in the past 52 weeks. Obviously, as I said, the fundamentals, the dividends, and then this kind of free cash flow to see if maybe there's a company that we may want to buy right now. So with that said, make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And if you would like to join us on the Discord, the link is in the description below. So with that said, let's get started with this analysis. So we got over here the company profile. Global Payments Inc. provides payment technology and software solutions for card, check, and digital-based payments in the Americas, Europe, and the Asia Pacific. It operates through two segments: Merchant Solutions and Issuer Solutions. The Merchant Solutions segment offers authorization, settlements, and funding, customer support, chargeback resolution, terminal rental, sales, and deployment, payment securities, and consolidated billing and reporting services. This segment also provides an array of enterprise software solutions that streamline business operations of its customers in various vertical markets, and value-added solutions and services such as point-of-sale software, analytics and customer engagement, payroll and reporting, and human capital management. Guys, I think we can pretty much just stop it right there. Yeah, they're mainly in the sector for payment, right? For payment, very very similar to that of PayPal by the sounds of it. This is like the first time I've ever seen them ever. I don't necessarily know where they are, like what they actually are incorporated in, right? However, we can see here that it does stuff with like government and that kind of stuff. So it's a little bit interesting, right? It's just a really interesting company that has a lot of applications, especially right now, with the fact that a lot more people are, I hate to say it, using more, I guess not using more, but using less cash and using more things like credit card and that kind of the sort. So yeah, that's a pretty niche market. And this is something that it's very, very prominent right now, and I don't see it going away, mainly because of the convenience. So now let's jump into the earnings. I did forget to mention this at the beginning. We are going to cover a little bit of the earnings as well, or at least a summary. We can see here that the last earnings was on May 1st, which just happened last quarter, or last month, sorry. EPS normalized actual came in at $2.59. That was a beat by 2 cents. EPS gap actual $1.22, beats by 12 cents, and revenue of $2.18 billion, which is a beat by almost $8 million. Now, next one's in August. We're going to have to take a look at that right now, but you guys can see that they pretty much beat on every single part of their earnings. And if we take a look at their overall earnings summary, we can see here, I guess the most important part would be this adjusted revenue of $2.18 billion, up 6.6% year over year. They also go on to say, or Whipple, which I'm assuming that's the CEO, said the company continues to expect adjusted net revenues to be in the range of $9.17 billion to $9.3 billion, reflecting a growth of 6 to 7%, and adjusted earnings per share to be in the range of $11.54 to $11.70, reflecting a growth of 11 to 12% over 2023. I guess that they are still in 2023 for some reason. Oh well. Annual adjusted operating margins for 2024 are still expected to expand by up to 50 basis points. So there you guys have it, right? There you guys have it. Now with that, let's move into now the calculator. So let's take a look at this. We got the ticker for GPN, market cap of $24.1 billion. That PE actually looks fairly good at 18.75, current share price of $94.37. If we take a look at this graph on the 5-year, actually, let's switch this to the 1 year. This is down, guys, 6.6%. Year to date, they're down 25.7%. I'm assuming this is why y'all wanted to see this company. because we are near that 52-week low, guys, at $91.60 and a 52-week high of $141.78. As of today, on Thursday, this thing gained 2.34%, guys. Absolutely massive. And post-market, they're up again 0.35%. So it's seeming like it's starting to tick back up. However, it's still near that 52-week lows, which is a great starting point to analyze companies, right? So let's come back over here. They do pay out a dividend of $1, which if we take a look at this dividend, it is a yield of 1.08%. So it's a really tiny yield, a payout ratio of 9.43, which is really good. Like that payout ratio is really solid. And a 5-year CAGR of 90.37 with 0 consecutive years. So my question with this, did they just begin paying out this dividend? By the looks of it, well, actually, if we take a look over here at the max, well, no, they have been paying a dividend, but you guys could see that it was a penny for, well, ever since they started this. You guys can't see that, but this extends all the way up to, well, there you guys have it, to May 14th, 2001, and it stayed at a penny through a bunch of stock splits up until, there you guys have it right there, right? December 11th, 2019, where they increased it from 1 penny to 20 cents. So that's the reason why the 5-year CAGR is looking at 90%. That's not really the case, right? It's not really the case in the slightest. From 2019 to now, they have increased it by 5 cents, right? So all in all, it's still looking, it's looking fairly good. I wouldn't see the cash flow payout ratio though. That one's gonna be the more interesting one. Ex-dividend date passed as of, well, as if I'm recording this, it passed as of 6 days ago. It was on June 14th, and they're actually paying out, guys, on in 7 days since you guys see this video, in 8 days for me, June 28th, and they do pay their dividends quarterly. Let's come back over here. Based off the current shares outstanding and this dividend, they pay out $255 million every single year. Take their 10-year average free cash flow, they're left with, look at this. This is, wow, that's actually kind of crazy. $871 million. The last year's free cash flow is absolutely massive at $1.335 billion. These payout ratios are 16.04 for the last year's free cash flow and 22.65 for the 10-year average free cash flow, guys. It's basically telling me that they can afford this dividend. They can absolutely afford this dividend, and even to increase it more if they wish to do so, as long as that they keep their cash flow the way that is currently going. However, I want us to look at trends here, right? This may just be a blip in the system, I guess you could say, or I guess to be fair, with the 10-year being that low, right? It probably is a trend right there. But nonetheless, so let's jump now into the overall graphs for this company. So let's start off with the net income. We got 10 years ago of, you guys can't see that. 1 second. $278 million to 1 year ago of a whopping $986.2 million. That is an increase of 255%. You guys can see that as of 2 years ago, this did come down from 965.5 to 111.5. This is definitely a blip, because obviously the next year everything went back to normal. So and then some, right? And then some. So I'm gonna give overall, guys, this 70%. Reason being, it's nothing to do with this, but it has to do with this right here. You have instances of this coming down, going from 7 years ago to 5 years ago, 468, 452, and 430. Same deal when it comes to the 10 to the 8 year ago. So I don't necessarily know where this is going. So I'm a little bit cautious. I'm going to say a 70% when it comes to the net income. Looking now at the free cash flow. The free cash flow is actually looking fairly decent. Now, if we take a look at this, we can see 10 years ago of $337.3 million to 1 year ago of $1.6 billion. With a B, that is an increase of 372% with an average of $1.13 billion. Guys, technically from 7 years ago, this is looking like fairly good. Actually, let's even take that back even further. If you take the entirety of the 10 years, this looks like a very consistent graph, right? Almost not perfect, but it is fairly good. The one point of concern here is the drop from 3 to 2 years ago, probably COVID related, but then again, from 2 to 1 year ago, maybe interest rates, All in all, though, I'm going to have to give this once again a 70%, just out of caution. I'm not saying that is bad, but just out of caution. Now, looking into the revenue does look fairly good, going from $2.77 billion, yes, to 1 year ago of $9.65 billion. That is an increase of 248%. Aside from 6 years ago, this is fairly consistently increasing. And from 4 to 1 year ago, it's looking really good too. I'm going to give this a 95%. Looking now into the assets, here it is as a reference, and the liabilities as a reference. The liabilities look a lot. Oof, the liabilities do look way worse than the assets. Like, you guys can see that massive, just consistent spike right here from 5 to today. All in all, though, the assets minus the liabilities, it's a little bit weird, right? You see a spike 5 years ago, but then ever since then, they just kept bringing it down fairly consistently to today. So I'm a little bit wary on this. Average total assets of $30.4 billion, liabilities of $15.35 billion, a difference of $15.04 billion. I'm gonna have to give this guys a 70%. Once again, not bad, but just out of caution, a 70%. Now, the cash flow minus the liabilities, I wish it could be a whole lot better, right? I really wish it could be a whole lot better, but it's fairly consistently decreasing. They had a few instances, actually, yeah, they had a few instances here where they brought it up slightly. All in all, though, it's still decreasing. And, you know, as of 1 year ago, it is negative $25.2 billion. And the average is negative $12.88 billion. I'm gonna have to say, guys, a 50%, maybe even lower. Yeah, maybe I have to shoot this down, maybe like 20%, because it is. There's more instances of this thing continuing to go down than it is of it actually going back up. So I'm gonna have to say a 20% for this one. Now, looking at the shares outstanding. At first, this looks a little bit weird, right? At first, this does look a little bit weird, going from 130.6, you guys can't see that. Let me see if I can fix that. 130.6 million shares to today of 255.1 million shares. That is a massive jump of 95.33%. But you guys can see that this mainly happened from 6 to 5 years ago. If you just take 5 years ago onward, this is decreasing fairly consistently. And you know, even prior to 5 years ago, they issued, yes, but there wasn't a lot. They had instances where they bought back like 7 to 8, as well as 9 to 8 years ago. So I'm gonna give this 100%, believe it or not. Yes, I understand this, but I look at this, guys. I look at this, and I'm just like, I think this is just a blip. I honestly do think that this is just a blip because they are buying back shares. So I'm gonna give this 100%. It actually doesn't even look that well. It looks pretty bad, but it's not as bad as it could be. And lastly, cash equivalents. This is consistently increasing. I actually like this really a lot. This is currently at $2.2 billion with an average of $1.6 billion. For the overall grade, it's a 75%. I kind of feel that, right? I kind of do feel that because it's just like, it's weird. It's good, but it's just, it's like right there, right? It's a solid C. It's a solid C. So tell me what you guys think. Do you agree with my grade or not? And what do you give it as a grade? Tony and Brett, let me know what you think about this company. I mean, you guys clearly like it. So I really am interested to see if you guys got the same grade or do you agree with my grade? It's a 75% kind of company. Not the best, but not the worst. It's totally average in my personal opinion. Now, when it comes to the valuation, this is the part that gets most people. Let's take a look at this and see if at the current share price, this is looking like a buy. So let's jump into another calculator. Not adjusting for debt, we got $359.67, and adjusting for debt, $305. So let's actually take a look at this, right? Let's do the protected share buyback first. They have been issuing, on average, every single year, basically, around -9, or issuing, right? 9.83%. The problem with this is that this was mainly done in one go, right? In 1 year. And ever since then, they have been buying back. So I'm going to have to give this guys a -2, meaning that they're going to issue shares at around 2% in the next 10 years. They're not going to do anything. And then they're going to buy back shares at around 2%. I think that that's fair. I really do think that that's very, very fair. Now, when it comes to the overall revenue, 18.12%. Okay. I am tempted to say, guys, I'm tempted to say 15% for the lowest, okay? 18% for the median, basically matching what they just did in the past 10 years, because that revenue is very consistent. And for the highest assumption, let's say 21%. Let's say 21%. And the required rate of return, it's a payment processor. So I'm going to have to say, guys, beating the market by a lot, 15%. And with this, we get $178.32 to $404.90. And then adjusting for debt, $133 to $338.17. Margin of safety of 5, 10, and 15, $113.55 to $321.26. It's honestly, yeah, I understand why you guys are into this company, because this does have a lot of potential, especially being 52-week lows. Now, to all of you who might say, I love it. I really do hope that nobody says it'll never get there, because, you know, when a company, when this thing says a company has to fall, people say, oh, it'll never get there. And if people say that, oh, a company is going to go up, it'll never get there, that would be quite a situation. But yeah, based off of this, guys, in the next 10 years, assuming these assumptions right here, it's looking like it's a pretty good buy right now. Again, not based off of your assumptions, just based off of mine, not financial advice. Every investment is the present value of all future cash flow. The calculator is available for free. Use it and tell me what you get. Yours is based off of the 5-year, not the 10-year. Your numbers may look a little bit different, but all in all, it should still give you a rough estimate. And yeah, now in regards to that dividend looks really good, right? Dividends looks really, really good. And if we take a look at this dividend, putting in, guys, well, here's the thing, right? Here's the thing. 1% isn't a lot, right? 1% is a lot. So putting in $6,215, this nets you $65.86. The main thing to take here is the fact that A, they can afford it, and B, they might be able to increase it a lot more in the future, right? Especially if they continue going like this. There may be a point that you may actually like to buy this company right now for its dividend. 52-week lows. The calculator is saying it's a pretty good buy. Fundamentals are a solid 75%, at least for me. And the dividends have a potential of it going a lot higher. So yeah, that's just my 2 cents when it comes to this company. So all in all, thank you so much for the recommendation, Tony, as well as Brett. It's looking like a very interesting company. If you guys do not have fintechs or any fintech, and you're looking into one that may have potential, honestly, this one may have potential. Please do your own due diligence, though, not financial advice. Anyways, guys, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And if you'd like to join our Discord to talk with like-minded people about investing, commodities, options, dividends, you know, all of that good stuff, inflation, follow us on the Discord, guys. Link is in the description below. So with that said, peace out, and we will see you all next time.